is Martin from Secret, the channel for learning about trading and investing. Welcome to another episode of Markets Tomorrow, the daily markets analysis show, where we look at what happened in the market during the day and how we can plan for a better trade tomorrow. And this is analysis for December 24th, Friday 2021. If you're not subscribed, please subscribe and share to your friends so that you benefit all. So what a day it was, what an expiry it was, right? It was basically a gap up day. Both indices gap up and expire, and then it remained flat, right? And the expiry closed green. Market is showing some indecisiveness as per the candlestick patterns. Let's dive in and see more details on what exactly are we talking about, right? So as usual, we will be looking at remember this is for tomorrow. The analysis is for tomorrow, right? It's a Friday, December 24th, and we'll be looking at all of these parameters that you see on that left side, right? We'll be looking in the charts, and we would also have some data analysis that on the parameters on the right side, additional things that we'll be looking at, and we'll wrap up some actionables also along with that, right? So without wasting time, let's get into the price action. What kind of candle we have? So this is a gap up. It's a kind of bullish kicker pattern that shows clear evidence of bullishness, but the closure was more like an indecisive because the candlestick is a doji and a small body, right? And this gap that is formed by the kicker pattern, which is a professional gap, would remain as a support. When it is falling down, right? But the bank nifty, see what has happened. It's a small body only. It is a gap up also, and it's closed above the previous day's high also, but it closed red because it could not sustain after the gap up, and then last minute it fall down, and then managed to close in. This is what happened, right? So Nifty today, it was a 0.69%, 170 points of gain, reasonable green, closing green, and the main thing is that 17k was protected. It was closed above that on expiry, 17k, and above the previous day high also, right? If you look at so last 4 days we're making higher high, right? And yesterday also it was a gap up and managed to close above the previous day's high, and today we have bullish kicker gap up, right? For gap actually. So Bank Nifty 0.46% on 162 points. It was weak as compared to the Nifty, but it managed to not actually gain. It closed to gain points, right? 160 points up. It's not green because it's going to sustain up, the opening levels and close below that. Intraday, if you look at both of them have gapped up. This is exactly what happened in the 15 time frame. Nifty, see the gap up, and then it was exact move within a 100-point range. Here also it's a 500-point range that it's exact, but it just could not sustain, and the last candle just crashed. Right, that's what happened. So it would have recorded to 250-300 points. So that's a price action intraday, and volatility, if you see, Bollinger Bands will tell that. So you can see that there is some sideways movement on the lower bands of the Nifty. Bank Nifty continue to be lower bands are crashing down, expanding volatility on the downside, which is bearishness. But this is showing some indication of a sideways movement on the Nifty. Another thing to note is the median 20 moving average of the Bollinger Band. So it is right at that point. So it is crucial to have a close above this 20 moving average, which comes to near to above 7200. So whether that would happen in the coming days is the question. If that happens, then there is high probability that you will go above this 17600 levels, and then market can rally back. So as long as the 17600, which is the previous swing high, or the lower high, so the previous lower high is this point is 17600, that has to be cleared. But before that, the 20 moving average is right at the 17200 levels. Green closure above that is required today or tomorrow. Otherwise, we may head backwards downside. Another thing to note is that the gap was cleared on the Nifty yesterday, and a new gap is formed on the upside and some downside. But look at Bank Nifty, the gap is still not cleared, right? It's still stuck in the gap, right? And momentum is weak and close red. Last minute breakdown. So overall bank nifty is weak. It's not supporting. And look at the support resistance levels, right? So you have the first support at 16,700 at 750. Then you have 16,550, 650, and then 16,350, 450 down. So these are all the supports. 16,350, 450 is the previous swing low. On the upside, you have 6,900 also is a Fibonacci street. That's also a support. On the upside, you have the resistance. This is actually not support, it's resistance, which is 17. This is also support because it's close above that. Support is 7. Yes, on the upside, you have 17,200 and 17,300 is the first resistance, and then 17,350, 400, then 17,500, 7,600. So, which is very crucial. Which is a Fibonacci 23 level also. Bank Nifty, if you see, the current the first support downside will be 34,350 to 34,750, the Fibonacci 61 level, and then after that you have 33,950, 3400, that range, and if that falls, you fall back to 32,400 to 32,800. That'll be a big fall. That's the supports downside, and upside you have 35,600 to 35,900, and 36,300, 600 level, and then above that you have 37,000 nearby range. So these are all the resistance on the upside and supports of the bank nifty. Now the next thing to look at is momentum. Price momentum's it is sideways on the nifty, but look at bank nifty. It is momentum is still in the bearish zones. RSI below 40, and we had been talking about a diluted bullish reverse divergence that is in action. It is work in progress. It is yellowed because it is 15 bars. Large number of bars, lesser will be the effectiveness, but it seems to be working, and if the target is met, it can go up to 7,600 levels. If the target similarly is met on the bank nifty, it can go up to 37,400 kind of levels. Medium term, it is it's a sideways momentum itself. So bank nifty showing the momentum problem, still in the bearish zones. That's a concern. Nifty has got back into the sideways momentum. Whether it will sustain or not, we'll have to see. Now trend indication, ADX indicator, still in the bearish zones in the short term daily, and bank nifty also same. DMI negative is dominating, and the green ADX trend indicator seems to be kind of moving up. That means bearishness is still there in the short term. Medium term, anyway, bearishness is already there. Right, so this trend crossover has not happened is something that we'll keep in mind. Both on the indices, it has to cross over when DMI post has to get dominated. So that has not happened neither in the medium term weekly nor in the. So as long as, so once that happens, we can say that. So that may be happening at 17,500 above levels on the Nifty. So that's what we have to wait for. Until then, it's very indecisive. Doji, the candle pattern itself is showing indecisiveness. We have a so that is something we have to keep in mind. Volatility, India VIX today further dipped, cooled off further 4.5%, and then it is getting closer to the lower band of 15. Right, 15.82 is very close today. Implied volatility is of Nifty is 17.81, and implied volatility percentile is 57.6. That also has dipped from the 70 level. So basically, it is maintaining the 15 and 20, that range. So anything above 20, you have to be careful. And since it has come to the bottom, the two things that can happen: either it can fall down to the previous range of 11 and 15, that means market may be moving up, or it can continue to mean revert from this 15 back to the 20 levels. So that means market will be crash. So that's the volatility thing that we have to keep in mind. Operators analysis, if you look at this is for the monthly expect actually December 30th, and so the data is now will not be the operators data won't tell you the true story, because actual trading on this indexes heavy volumes will happen from tomorrow, right? But as of now, this is the data that shows the highest put trading is seen at 17,000 and 16,500 on the Nifty. It's 18,000 and 18,500 in the versus call trading. right? Bank Nifty is 35,000 and highest put writing, and 34,000 put writing after that. So 36,000 is where the highest call writing is seen, and after that 38,000 is where the highest call writing is seen after that. So 0.77 is not bearish but not bullish also. Put call ratio we're talking about on the Bank Nifty. 0.97 is close to the bullishness. So overall it sees the Nifty is bullish but Bank Nifty is catching up. And today's open interest build-up, if you see, it's a long build-up on both indices, Nifty and Bank Nifty. So that's the open interest status. So you have to match, correlate this levels with the chart levels, and then come to conclusion on where to take the positions on breach or on which levels has to be combined view of the chart and the open interest analysis. So today we had green day because of IT performing, and some banks also performing. SB and Axis Bank, HDFC also did good. Just Finance, so consumer from CG did good. The Sunliver and ITC both performed. Right. Reliance, HDFC Bank and ICICI is not showing some traction. Yeah. So that is the picture of heat map of Nifty. Now sectoral performance, if you see IT closed. So there is a up move today that happened all the across the sectors. IT is bullish, 1% up today also. So it's already momentum wise also it's bullish on both time frames, short term and medium term. So IT is trying to pick up stocks. Metal close slightly red, slightly few points. Auto 0.74% up, 0.71% up. Pharma, FMCG 1.34% up, and reality is 2.3% up. So there is up move that has happened, but the only thing is the momentum is still sideways on all of this. You have to wait for the momentum to catch up. Until then, you have to pick stocks from the IT. It is only sector where we can have a sectorial picks that can be done at this point based on the price momentum. The institution data is not published as of now, but as per yesterday's data, there is some reduction of selling that has happened. It has come to 3-digit for first time after 14 December. So, and today also it may be something like that. Right? But DI is continuing to buy, and then there is a difference between the DI buying and the total is 5 selling. So 5 selling has not stopped, it has reduced, and most likely it may be something in this range today also. We'll have to check that later. Now dollar, this is the dollar index on the right side that you see. It is consolidating after the breakout, right? That's a dollar index, and but the USD INR currency pair is weakening. Seems to have had some central bank intervention. It has been dipping continuously for 4-5 days, and it is at a breakout zone. This is a zone from which it tried to break out at. So it's cooling off really, right? The currency pair is basically strengthening, right? And the momentum also has dipped, right? It was forming a range shift kind of thing, and it has broken that. So most likely it may either consolidate here or take it up to the next support level, which is 74 kind of levels, right? So right now it is 75.1. So PE has gained some strength today, and crude oil, if you see, it is hovering around this 70-72 that kind of levels today. Also, it's kind of consolidating after it has pulled off a substantial amount during the last several weeks, right? So it's in a sideways right now, but anyway, it's not shooting up. Gold is also consolidating, but today it seems like it is trying to jump up from this very strong support zone, right? Some spike is seen today, right? And below what you see is the US and the global markets. Today, Dow Jones seems to have closed green with 260 points. Today it is not opened. Big moves are not seen as of now, but you'll have to check there in the pre-market if any big moves on either side of the indices of the global markets, US, UK, and Chinese markets are there or not. You'll have to check there in the pre-market before you can keep. As of now, nothing is seen. Except that Dow seems to have recovered and started moving up. Actionables, Infosys, we saw that IT is performing, so it is Infosys seems to have broken out of a box pattern. Momentum is shooting up, trend is shooting up, volumes are good, so that is something it can be tried with the stop loss at this breakout zone. Vapor also seems to be trending up and within a parallel channel. So huge volumes are there, momentum is good and trend is also good. So two picks from the IT sector. Wrap is mild bearishness and the sideways on the short term for tomorrow. Reasons, that's what the charts are saying, that's what support levels are saying, that's what the momentum sideways is saying, that's what the trend bearishness is saying, and that's what the continuous institutional selling is saying. The Nifty did gap up, it did close green last 2 days. Yesterday is indecisive and it has actually climbed up 4% from the previous swing low, which is good, but there is indecisiveness today also. It's a small body. There is a right resistance right away on the above 20 DMA, right? Bollinger medium band is there right above, and the most important thing, Bank Nifty is not very supportive. It's having a weak momentum, bearish momentum actually in the short term, and it's not very supportive enough. So that is the reason for bearishness, and it is mild because it is bounced up quite substantially from the previous swing low, and it could at least go to the parallel channel top, at least, which is near to the 7500, right? That's why it's mild. So it could attempt that, and VIX has cooled off to the lower level. Anything above 20 you have to worry. Right now it is at the lower range 15, so it could be in road and go up. That means markets can go down. That or it could get into a new zone at the 11 to 14. That also can happen. So we'll come to know about that from tomorrow onwards. So the last section will be a repetition of what I say, and this may be still a time to get good quality stocks at reasonable price as a long-term investment, and short side option selling and buying also could work, but long side play on the option buying may be dangerous at this stage. So it could give the opportunity, but the only thing is you'll have to either hedge it or put the stop loss. So always go for vertical spread, so that you have a risk that is defined and then you know what you are losing again. So that's a wrap up. A mild bearish sideways view, and that's my view, and it may not be yours. You can form your own view, but if it helps in any way to form your view and your trade plan, consider hitting the like button and then share it to friends and colleagues. Thanks for watching. Happy trading, happy learning. Bye.